Hi, I'm Faruk Jaffer, certified financial planner with Index Gurus. Welcome to this quarter's market update. Today, we'll keep things clear and useful. First, a quick recap of where markets have recently been, then the present and future trends shaping the months ahead, and finally, exactly how we're positioning your portfolio to benefit. We'll close with what all of this means for you. Let's dive in. So, where have we been? Early 2026 brought choppiness, swings tied to geopolitical headlines, energy prices, and doubts about whether the AI boom had run ahead of itself. But zoom out, and corporate earnings carried the day. Early results showed nearly 88% of companies beating expectations, letting valuations cool even as prices held. Markets looked past the noise, and strong fundamentals kept volatility from dominating returns. That resilience matters. Now, the present. The latest data is steadier than the headlines suggest. The economy grew at 2.1% pace last quarter, with business investment jumping over 10%, much of it the build out powering artificial intelligence. Hiring stayed solid, and wages grew around 3.4%. Corporate profits climbed sharply across the board. Inflation holding near 4.2% keeps the Federal Reserve patiently on hold. Let's talk trends, starting with AI. The story is maturing. Investors no longer treat every AI name as a guaranteed winner. They're asking harder questions, and that's healthy. The build out is real, but it's concentrated. Technology drove more than half of last quarter's earnings growth, and the seven largest companies are growing profits much faster than the rest. That gap between leaders and laggards is widening, so we stay selective. The second big trend is that the market is broadening out. For 2 years, a small group of giants led on earnings, growing profits far faster than the rest. But leadership in returns is now widening, and so is the opportunity beyond US borders. International markets trade near 15 times earnings versus the low 20s here at home, a real discount. A more balanced, globally aware portfolio opens new doors for growth. So, how do we turn these trends into smart positioning? With more choices on the table, picking quality matters more than ever. Our approach centers on economic moat analysis, grounded in Morningstar's valuation principles. In plain terms, we favor companies with durable competitive advantages, the kind that protect profits for years, and we buy them when they trade below our estimate of fair value. It's discipline over hype. Here's my bottom line for you. Volatility is normal. It's the price of long term growth, not a reason to panic. Behind the scenes, I'm constantly watching the data, stress testing your plan, and adjusting where it makes sense, always with your goals first. You don't have to track every headline because that's my job. My commitment is simple to protect and grow what you've worked for, patiently and prudently. One last thing, the best compliment you can give me is an introduction. If a friend or family member is feeling unsure about their investments or just wants a second opinion from someone who'll put their interests first, I'd be glad to talk with them. No pressure at all. Send them my way. And thanks for watching. I'll see you next quarter.